All right, guys. Hello, hello. Welcome to Tax News Live today, brought to you by the Income Tax School. Thanks for joining us, and we hope everyone's having a great day. And I think tomorrow is the first day of summer.
Yes.
So I'm Terry Judge, Marketing Director at the Income Tax School, and I'm here with two of my favorite EAs, Ty Gaines and Lysandra Everett. So we're going to get started. If you have questions or comments, type them in the section below, the comment section, and we'll get to them as soon as we can. And let's just jump right into the hot topics, guys. What you got for us?
Okay, so it's about summer.
It's summertime.
It's summer. Have you slowed down yet?
No.
No. Okay.
And in Virginia, we can't slow down until June 30th because Virginia passed a late tax law. We know everyone's not in Virginia, but check with your state. And basically said that if people file by June 30th, then they may be eligible to receive $110
Yeah.
for single filers, $220 for married filing jointly if they have a tax liability.
Yeah.
But they have to file by June to potentially get a refund in October. So now anyone in Virginia has to file their taxes.
Awesome.
If they want that extra $110, of course. If they don't, then
Hey, it's
whatever.
$100, so
but
I'm all for it.
basically, your neighbors might get that money, and you might not if you haven't filed yet in Virginia. So that's probably why I'm still busy
we're
trying to
still
get
rolling.
those people in. I'm looking forward to July.
Yeah, me too. All right, let us get down with the topic for today. Okay, so this is a big one.
Huge.
Huge. Okay, so if anybody
Huge.
has ever questioned why the National Association of Enrolled Agents, our existence, we are about to give that to you today.
Yes.
You're going to learn today.
Because they are advocates for the tax profession, and they have been pushing for something that has finally passed the House and Congress.
Yeah.
And that is the Taxpayer First Act. We're waiting for
The president to sign it still.
the president to sign it, but other than that, it's got some pretty cool things in it that we're hoping they actually implement.
Yeah, I think the first thing that people need to know is that we as enrolled agents and as tax professionals, we work for you, the taxpayer. We don't work for the IRS. And I still get people asking, you're an enrolled agent, do you work for the IRS? No, we work for the taxpayers. It's just that we have gone through the training and gotten we've suffered through the tests and passed.
Definitely separate.
And so now we're authorized to practice nationally, but we work for the taxpayer. And so this Taxpayer First Act is really going to help
Us help the taxpayer.
Yeah, help us help the taxpayer. That's right.
At least we hope.
Help me.
Help
you.
That's basically what we're trying to do here. So,
Right.
So what's some, we've got some good, first of all, let's talk about the one that I don't see happening, and then we can talk about the one
Okay.
that may appear. But
Great.
the improved customer service.
Now.
Let's just all laugh. Okay.
Okay.
We
so
love
the
you, IRS. But
right,
in customer service, not really a strong point.
It really isn't because, and it's not all their fault because they've had cuts in funding and they have not been able to hire people like they normally would.
And train.
So it's going to be, even though that goal might be improved customer service, that might just take a minute to get there.
And the shutdown pushed things back and training, and they're behind. So we're going to hope that one occurs. At some point, they're supposed to establish some standards for what good customer service means, which may be things like answers so many calls per day or per hour or period.
Right. Right.
Don't hang up on people after they've been on hold for I don't know.
4 hours.
I
yes.
mean, there's going to have to be some kind of mechanism in place to
So even though it's part of the implementation, again, it sounds good, but the implementations and the hurdles that they're going to have to cross, I don't think that's going to be an immediate impact. I think that's something that we might see over time.
But we're excited either way because some of these things probably should happen. Another one, I guess, is the innocent spouse. That's a big deal.
Right.
For those of you who don't know, it's usually when a spouse files a joint return but doesn't really know what's on the return, and then that return is pulled probably for audit and they owe more money than they did before, or they just owed it in the beginning and the other spouse is responsible for it, but they don't know what's on it.
Right.
Technically, like maybe one spouse has a business and they didn't really tell the spouse,
or even in cases of, and I think where we see it most is in cases of domestic violence, where there's one person that has complete control of the finances, and then the other person, really doesn't know, and so it causes, and when they separate, then one spouse has created this tax liability, and for the other spouse, and they're trying to get from under it because they really did not cause the issue to begin with. So that's where we see a lot of the innocent spouse claims, and so we hope that
this will help. This is supposed to help improve the equitable relief for innocent spouses. So
right.
That'll be a good thing if it happens. And then some of the other ones are based off of like income, like the OIC. There's usually a fee if you fill out an offer in compromise, which is an OIC, which basically says you can't pay all the debt that you owe. So you're trying to reach some agreement with the IRS on what you can pay, but there's an application fee for that. So they're going to change that fee for those that are low income,
right? Because because it was that they had the option, but now they're going to have to make that.
You had to justify that you were low income and go through some. Now it's going to be based on the poverty. Poverty level. So if you're under a certain percentage, I think it's 250% below. 250% below poverty level, then you wouldn't have to pay the fee for the offer in compromise, which could help, because it's like if you don't have the money, you have to pay the fee just for them to tell you if they've accepted it or not.
Exactly.
And they might not. So,
right, exactly. Yeah, that makes sense to
that's
me.
helpful.
Yeah.
And then private debt collectors too.
Oh, this one really grinds all of my gears. I already don't like the private debt collection anyway for that. For the IRS, and especially if you don't know who you're dealing with. I just didn't even like that one.
Right.
Do we have a question?
We do have a quick question. We have someone who's asking about what the difference is between innocent spouse and injured spouse.
Okay, so innocent spouse usually deals with a tax liability. Injured spouse is usually dealing with a tax refund. So if you have a couple where one person has a tax liability and the other one doesn't, they get married, it could be student loans, it could be child support, and if then once you get married, you
usually know that beforehand.
You hope.
You hope.
You hope.
But yeah, you might have an idea that this person has some issues.
Right.
For an injured spouse. Whereas the innocent spouse, you might not know at all.
And the thing about the joint tax return is that you have to understand that you are responsible both jointly and severally, which means together and also apart. And so even though you're coming into a union and you may not have caused this tax debt because the other person did it, then you are.
You didn't even go to school, and they got school loans.
Right? Exactly.
They have kids. They owe child support.
But they owe child support. So if you are a working spouse and then you are due a refund, what injured spouse does is allows you to get your portion of the refund, and then the other spouse goes and deals with
what they owe. So it would stop the IRS from taking the entire refund. But the injured spouse does have to have some type of withholding and tax payments in order to be eligible for that. So if they are a non-working spouse, they can't be an injured spouse.
Exactly, yeah. And so with the innocent spouse, like we said, is usually in an issue like with domestic violence. And I use that because that's where I've seen most of my cases from is, dealing with domestic violence where...
Or just the divorce that... in general, from someone who they didn't have any control over the finances.
Right, exactly. And so, again, that jointly and severally. So if you are the injured spouse, and then you go and you start working and you earn you overpay and you get a refund, then the IRS is going to be coming back and taking that refund because, again, that jointly and severally. So that's where the injured spouse comes in. Protection,
yeah. Where you can still file jointly and get your portion of the refund. But the rest of it does get taken to. Yeah,
and then you can get from under the debt that your previous spouse may have caused in the injured spouse situation. Mm-hmm. So, I think they should have found another letter than the injured or innocent.
I know the term is kind of awkward and very difficult. Actually, we have, I think one of the advanced courses at the income tax school does really clearly talk about the differences between those two. So we do have a course on that.
They should have just went to another part of the dictionary. Is all I'm saying.
Yeah. It's a little tricky, but they different. There are different forms to file, and one is filed with the tax return, one is filed, the injured is filed with the tax return, but it can be filed after. And the innocent is definitely a process much longer, like
absolutely
12 pages or something, and it's done after the fact. You can't say you're innocent when you file because innocent means you didn't know about it. So, just throwing that out there. So, so did we finish with the private debt collector? Basically, all we were saying was that if their AGI is less than 200% of the poverty level, this is part of the Taxpayer First Act now, that they can't force them into some kind of payment arrangement. We basically want to make sure that these private debt collectors are not overstepping and basically forcing people with no money into installment agreements, because even the IRS has ways to, if you're not working, there's the currently not collectible. There's different ways that you don't necessarily have to pay, and we're not here to show you how not to pay debt that you owe, but they do exist. So it's not that just because someone's calling to collect that you have to pay. I mean, that the law does not say that, and this Taxpayer First Act will offer some more assurances in that area to where people can't just come beating down your doors looking for your money, and if they do say that they're going to do that, it's probably not the IRS and fraud.
Absolutely.
We haven't given them the authority to go do that unless it's criminal. CID shows up with guns, that's real. Just saying.
Okay.
And then I thought this was interesting. One of the things in the Taxpayer First Act is that they're going to limit taxpayer data to contractors. I didn't even know contractors had access to taxpayer data.
Yeah,
so it's funny how they tell you they're going to change something, and you're like, what? They can do that?
Okay.
So, apparently certain, like attorneys or contractors working certain cases usually have access to taxpayer data, but now they're making it to where it has to be like a special exception for that. Yay.
Yeah.
I mean, I guess that's good. Again, going with the fraud and
the identity theft protection.
Protection for identity theft is also part of this bill, which, identity theft is tough already.
Yeah.
Like, you're trying to prove to the IRS you're you and someone stole your stuff. Like, it's not an easy process. So they're already going to try to improve that.
Right.
So.
Okay, hold on. We have a question before we go to our next part.
So, whoops, I lost it. Hang on one second. Trying to find it.
We'll pause again.
Yeah.
They can repost.
When I find it, I will. I will
now, the one thing with this reasonable standard 45-day notice before contacting third parties.
Yes.
Now, I kind of gave that the side eye a little bit, right?
Right, because are they really?
And I guess, so what it is that the IRS, if you're going through an audit, the IRS has the right to contact third parties. We talk about being able to substantiate your expenses and all of that. So if you've got some expenses, some travel expenses or anything, that, the IRS can call and those third parties and try to verify those. Did this person
buy this from you? Did they purchase this? They can contact clients if you're a business owner, things like that.
Yeah. But I guess the one thing that I would warn people with this is don't be trying to coach people that they tell you that they're going to call, because that's going to be an extra charge if you actually get caught up in some stuff. Okay. So it's to let you know and give you the opportunity to inform people that, hey, this is going on. You may be contacted, and, to really buffer that surprise thing.
That's kind of shady. Like if you're a business owner and the IRS goes questioning your clients or something, that could make people kind of look at you and the business some type of way and affect, your income and things. So they're saying the IRS shouldn't just be able to go all guns blazing into places like, hey, do you do business with this person? Do you do that? They'd actually have to give notification.
Give you a notification.
And
but
45 days apparently is kind of the
standard. But that's, like I said, but that was be the one caution I give you, because if you go and try and coach, if you've actually done some stuff wrong and you go and try and coach that person, then that is an additional charge. That's illegal, just to let you know.
So don't do that.
Yeah, don't do that part.
But again, this hasn't passed yet, so the standards may be different.
Right.
They're working on it.
Right. Okay.
So I found the question that was hiding from us.
Okay.
Will there be a change to the delays of verification of identity?
When you say
like how long it takes?
How long it takes the IRS to verify?
I can't even tell you that.
That is not, they just said improved identity theft. I would hope that that was one of their improvements. It doesn't say that, and this hasn't passed nor been implemented. So we would hope that would be one of the things that they would do, because it's a long, drawn out process in some cases. So yes, we would hope improvements would mean we'd shorten the time frame for things that are currently taking a long time to do. But they didn't clarify what that meant.
The magic 8 ball says, I don't know.
We hope so, is what we're saying. We hope all of these things improve. Are we expecting to see anything real soon, real fast, immediate? No. And again, it hasn't even been signed by the president yet. But even after it does, the implementation of these things, we're still dealing with the fallout of the Tax Cuts and Jobs Act, which was passed in December of 2017. And they still don't have everything for that. We're still doing technical corrections. We're still rewriting things. We're updating things. So pack your patience. We're hoping this works. We're just saying it's a good start that we're passing an act holding the IRS accountable and saying we need some mechanisms in place. It just probably won't happen right away.
Exactly.
But let's hope it does.
Right.
And so, I mean, that's mostly our main points from that.
But wait. The one that also caught my eye was the fewer John Doe summonses.
Oh, the John Doe summons. How could I forget that?
Okay. So the John Doe summons for the crypto squad, this is one of those rub the salt in the wound kind of thing, because what happened is with the IRS, they basically did a John Doe summons to Coinbase to get access to the people who were buying and selling cryptocurrency, who were involved in cryptocurrency, because folks wasn't filing their taxes.
It's not taxable. It's crypto.
Yeah,
you can't find it.
Yeah,
I've heard
but
that
guess
many
what?
times.
But guess what? They
true.
found it. Okay.
Yes.
And so, but what a John Doe summons is that the IRS says we know that there's something going on. We just don't know who it is.
And who.
And so with the John Doe summons, that's what the John Doe summons is for. Like, we know that this is going on. We know that there is tax evasion going on. We just don't know who it is. And so they issued the John Doe summons to Coinbase. And Coinbase, they put up a good fight.
Yeah, they did.
They did. They tried. Okay, so it's not
bank account.
Yeah. So it's not Coinbase's fault, but that's what just an example of what the John Doe summons is. And so they're going to limit those John Doe summonses. It just might be a little too late for some people, but
I mean, but certain things, though, are still going to happen because they should be reported.
They're limited. They're not going away.
Right.
So I think it'll
just be a process for how it's supposed to happen.
And I think also in those extreme cases, like, those John Doe summonses are still going to happen, but they're going to have to, I guess, have a greater burden of proof that there's something funky going on.
Yep.
With crypto, that wasn't hard. It's like 500 people filed their cryptocurrency.
Yeah, be careful.
Taxes.
That was just not enough. You definitely need to file if you.
Yeah. So that's what had happened.
Bitcoin, you got to file. So
that's what happened. Okay.
Yeah. So that's kind of it. I mean, there's more to it, and you guys should look at the Taxpayer First Protection Act. But we were just trying to do some of the highlights, some things to look out for. We would be remiss in June if we didn't mention the W-4.
Okay, listen, y'all. Listen, Linda.
Listen. You have to check your paychecks.
Right. So, because there were a lot of people that were caught by surprise.
Yes.
Even if they wound up paying less tax, it's just the way that it came out in the wash.
A lot of people don't understand getting that extra $150 a month. It's not the same as getting it at the end of the year. The W-4 did not change. It didn't change for 18 and 19, even though there was fallout from it.
Right.
So it's still the same. So you need to still look at, if you owed last year, you're going to owe again this year, especially if your situation is the same. So you need to make some adjustments on your W-4.
Right. And now is a great time to do it, because you can really just look and see. We're halfway through. You look at your tax liability for last year. Are you about halfway there?
Yeah.
If you're not,
based on your, look at your pay stub.
Yeah.
And you see what your withholding is to date. Look at what you owed last year. It's basically a halfway point.
So
if you didn't make it, if you're short $1,000, start doing an extra $200 a month or something for the rest of the year to make sure you cover that.
Yeah.
I mean, simple math can do it. There's a calculator at the IRS website that's some people can use and some people it doesn't help. But there's basic math, guys, that
and that's like as basic as it
use.
gets. You just go and you look, okay, if your situation has not changed, okay, this is what I owed last year, this is how much I've had withheld so far this year, how am I looking?
Yep.
And if you're not at the halfway mark, then you've got time to make those adjustments, or if you're way over, you can make adjustments
too.
Yeah,
so I wouldn't recommend that one. Just wait to the end. But still, just look at how short you are, and then you count how many pay periods you have left, and put an additional amount on the W-4 for your pay period. So if you end up short, an extra, and you divide that out and say I have so many pay periods, I need to put $50 more a pay period. You can update your W-4 and put an additional $50 out for the rest of the year.
Right.
And that'll cover your shortage. So simple math to fix your W-4.
Yep.
But definitely look at it. And then 2020, it's getting all crazy. They already have a draft out. They're still taking comments up to July 1st. So if you want to look at the draft, just Google it and then send your comments in, because it has the information on where to send them to. But it's still 4 pages. It's still extra. And although the layout looks a little bit better, I have a copy of the draft right here. You guys can Google it. But the layout's better. It's still asking for too much information. Mm-hmm. Most people won't still know the information. And we still don't know if they fixed the withholding tables in general. We just don't rely on this, guys. Right. I mean, you have to fill it out, but pay attention to it. Let's not just fill it out like we used to just claim 10, claim 0.
Right.
Like, read
no,
the
you
form
need to do some math
and
this
try
time.
to figure this out. I mean, there are some privacy concerns because it's asking about total household income and things like that. But it may not pass as such because it's just a draft right now and they're still waiting for comments. So send in your comments if you have any. But check your withholding.
Absolutely. Please.
Check your withholding.
For us. If not for you, for us.
And check your clients' withholding. Mid-year, June, this is the perfect time. Get all your clients before the summer really takes full and they spend all their money on their summer vacation.
Right.
Have them check the withholding.
Yeah, before you go to that amusement park.
Mm-hmm. And then lastly, before we go, we do have to talk about the Minimum Standards Act. What is it called?
Oh, okay. Hold on, y'all. Because
two congressmen, one from California and one from Florida, have come up with a...
it's called the Taxpayer Protection and Preparer Proficiency Act. Peter Piper picked a peck of pickled peppers.
Which basically means they're going to set minimum standards for tax preparers. They're basically saying, hey, there's a lot of rogue preparers out there that are doing returns that don't know what they're doing, especially with the tax law changes. And so they're going to establish... This act is supposed to establish some standards that preparers should have. I mean, beauticians have it, barbers have it, but yet anybody can do their taxes from their car.
Right, exactly.
We don't want that, especially now with identity theft and things. You don't know how your information is being protected unless you're going to a firm that realizes they have to protect you and purchase your cyber insurance and things like that.
Right. So when you're going, this is what I tell people. Do not be going to Ray Ray's Chop Shop. Don't, when you go to get your taxes done, the grocery store, the car dealership, all these other things, that does not mean that they have had any type of training at all. They have just purchased some software. They have gotten a preparer tax ID number from the IRS.
Hopefully.
You hope. Exactly. and
that's it.
And that's it. So just because someone says they've been doing taxes for 20 years, you can be doing taxes wrong for 20 years. So
ask them what their licensing is. And the income tax school has basic courses starting comprehensive right from the beginning if you have no experience.
And ask them about continuing education.
And we have continuing education.
Right. So because just because they don't have credentials
doesn't mean that they're not.
It doesn't mean that they're bad tax preparers, because we have tax preparers who are unenrolled preparers, but they take their continuing education. So they're up on it. But there are people that just hang up that shingle every January.
Don't even know what's new.
Exactly.
We have 2 quick questions. Okay. 1, what are your recommendations regarding claiming dependents erroneously? And 2, more information regarding the question. Custodial parent has attempted to claim dependent, but other parent or guardian literally beat them to it.
Right.
Filing electronically through TurboTax.
Gotcha.
Yeah. So. Happens all the time.
Yep. The custodial parent, you're going to have to go through and file paper
return.
And really go through that process.
And the IRS is going to ask for verification
exactly
over who was supposed to claim the child. They'll ask for school records. They'll ask for insurance. They'll go through their own thing, but they need to receive both returns claiming the dependent. So if it was already claimed, you have to file the paper return and say, I'm the custodial parent, and let the IRS contact you and work through contact the taxpayer.
Right.
And work through those
that process.
processes.
It's a drawn out process. So it's not going to be something that's over in
but
like
the custodial
30
parent
days.
usually doesn't have a hard time proving it. So it's just a matter of putting that proof out there.
Right. And what was the other question? It was more information about
that one.
Yeah, so the first was claiming dependents erroneously,
Okay.
and the second one was custodial parent has attempted to claim, but another parent beat them to it.
Right,
Yeah,
got it. Okay,
It's
yeah,
a
so that's
typical
it.
thing, and the second person has to file by paper or file without the dependent. So, and that could change a lot of things, their credits and things like that they should receive. So, if they're due it, they just got to file and wait for the process.
Right. Yeah, and I mean, I've had that 2 or 3 times over the last.
It happens.
Over the last season.
It does. And it's unfortunate, but it does happen. Yep. So was that it?
That's it.
I think that we want to mention that the income tax school is hiring. We need contractors to assist with writing the curriculum here.
Enrolled agents.
We prefer enrolled agents. We will take CPAs. That's a joke. We will take people that can write tax materials, but we do prefer you to be licensed. But if you just have experience writing curriculum for like our courses, the type of courses that we have comprehensive, we have advanced, or if you have your own topics that you've written on that might be newer, edgier topics that we can use for CE, we'd even consider that. So we're looking for writers, we're looking for talent, we're looking for information. We get to say we're both EAs and we like people that study tax specifically. So we are preference is given to EAs, but we will consider anyone with experience. So give a call to Sheila Clark at the Income Tax School or send her an email at sclark@theincometaxschool.com, and she will probably pass it off to me. But,
but that's the door. The door is Sheila.
If Sheila likes it, then we can talk about you helping us out writing some curriculum.
One super quick question before we close out. Is an employer ever liable if withholding is not enough for a taxpayer?
No. They have to pay their Social Security and Medicare. The employer is completely liable for those withholdings. But in terms of federal tax liability and state, that is on the taxpayer.
Right.
Although an employer should question an exempt W-4.
Right.
If they say they're exempt, they should say why. You know, if you're gonna owe.
But it's
not their responsibility.
Right. If the employee says, "I just want to file exempt," what's the employer has to do what they're going to say until they get that letter from the IRS that says you're not eligible to file exempt. Go fix it.
But the W-4 has to be filled out for the employer to be protected. So if they're just not withholding and not following instructions, if the employee filled out and signed a W-4 and they have that on file and they've withheld based off of that, then they don't have any responsibility.
Right. Yeah, the HR is not responsible for you to tell you
your own taxes.
Yeah, to tell you what your withholding should be.
Although this 2020 one is kind of getting
deep.
Department's a little more involved than they should.
Yeah.
So.
One more. Will the IRS stop employees from filing 99 finally?
Filing
99
exemption.
Finally.
Oh, 99 the exempt. I don't think they will, because some people are.
Right. If you've got a teenager, for example, that's going to make less than $12,000 a year, then they would be exempt.
Or a single mom making 15 with one child, they don't have a federal tax liability. So
right.
They probably won't take it away, but that's the reason why we have to educate people and let them know that they shouldn't be unless they know that they are.
Right.
And some people do need their money throughout the year, so they are.
All right, guys. Thank you so much for joining us today. If you haven't liked us on Facebook, please do this now if you're if you loved this event. So we will see you next month and have a great rest of the week. Bye.
Bye, y'all.